getting that debt down, then you can't stop working.
Yep.
Right, and we're talking about 1.1 million in debt, so a sizable chunk for a modest income.
What was the plan that we developed for this?
So we analysed the properties and we essentially looked at ranking them.
Yep.
So we've sold one last year. We're about to sell the second one, and we should have a third one sold by the end of the year. That'll give them a good amount of cash that can sit in the offsetting the debt, enough to free up their monthly cash flow, help the kids over the next couple of years, and freshen up their home as well.
Brilliant. At the peak debt level, refinancing wasn't potentially possible.
That's
because,
right.
So now we can potentially, with lower debt levels,
refinance what we've got left.
We're now in that refinancing window again, so we can potentially move those loans to a new lender and reset a 5-year interest-only period, which then frees up that cash flow, so we can make sure that it's at least sitting in the right offset buckets, that we're minimising our non-deductible debt as part of that particular story as well. So I think it's just a timely reminder that what's actually happened, this is a silver bullet strategy that has actually turned into a property trading strategy. They didn't want to do this, and now they're going to be hit with costs in terms of getting out of those properties. They'll have to pay capital gains on those particular properties. There is an explosion of these buyers agents with less than 2 years of experience, and they think that this is nirvana. They think they've found the secret sauce of investing in property, selling this idea that, we'll make these properties positive cash flow for you. You won't have to worry about them. Just get as many as you can. Let's load up with all your equity, and let's load up your debt level, and let's just go and buy, these properties in regional towns, hoping that everything goes all right, hoping that we haven't spoiled the market, hoping that interest rates keep coming down. So it's a strategy based on hope, not on skill and not on long-term planning. So they're skipping that planning stage. There's also that element of self-interest. If I've got 8 properties to buy, that's 8 buyers agency fees. Now, whether that's at $10,000 or $15,000 or $20,000, that's a lot of money. Again, 2 or 3 good properties in sensible locations, that might cost you 30, 40 grand instead of 80 grand. So you're saving on your professional fees if you get the sensible planning that you need to do. A trading strategy is completely different to fundamental investing. So the tactics of quick sale gains and rotating those properties and speculating in those markets just completely removes the fundamental long-term analysis that we have been teaching on this podcast since 2015 and will continue to advocate for when it comes to looking after your money.